Welcome to this week's market drama. We'll begin with the S&P 500, which was up 1.5% for the week. It is now up 2% for the year. NASDAQ was up even more, up 2.2% for the week. NASDAQ's above water now, up 1.1% year to date. So the market started pushing higher on Tuesday and early Wednesday. Then it pulled back late Wednesday after ADP employment data was worse than expected on the private sector. But then on Thursday, we had some positive trade news after the White House announced they held a productive call with China. In the back of that, oil rose significantly. Oil was up for the week 6.3%. But the biggest gains were actually seen on Friday after news on the better than expected payroll data was released for the month of May. So this helped ease concerns around the economy, specifically with how tariffs affect on the economy is something that now this data is starting to incorporate. So let's look a little bit closer at the main numbers. Payrolls were up 139,000, slightly above expectations, and the unemployment rate held steady at 4.2. On the downside, manufacturing employment declined 8,000 jobs, potentially reflecting the tariffs headwinds. But more broadly, the pace of job gains, even in the sense that they have been lower than seen last year, are still above what is needed to prevent unemployment from rising significantly. So that was essentially the market read that as good news. And what that also means is that when we look at the Fed and what they might do, 2 months ago, the bond market was fully pricing a rate cut in the Fed June 18 meeting. That probability is now close to zero. Right? As the economy continues to chug along, the Fed has room to keep rates where they are without having to lower them. So now when you look at what the bond market is basically telling us, is that the most likely first cut is actually going to be in the fall rather than in the summer. Right? So that's a change based on how the economy continues to chug along despite kind of the headwinds from tariffs. Next week, we have CPI data released on Wednesday that will continue to give us a sense of how much of the tariffs is actually kind of seeping into the real data. As I mentioned the last couple weeks, the soft data has shown a big deterioration. The hard data is still holding steady. The payrolls data is another example of the hard data holding steady. We'll see what the CPI data shows us next week. That is it for this week. Stay tuned for next week.